I want to just do a little replay, the same thing I did with FTM and 1, and kind of give the play-by-play on how I arrived to that trade, zoom in on it, do a replay of the price action, see what I missed, see what I did right, and just recap. So right now I'm on a higher time frame, 4-hour chart, and I marked out these areas. So we have this demand zone, this 4-hour demand zone that was respected. We obviously have this large movement down, this large 4-hour candle. What was it? 9.3% down in 4 hours. So what I did is I marked out the 4-hour supply zone, the mitigation block, and I'm going to zoom in and mark out the liquidity void. So we kind of have an idea of where price would have bounced, liquidity void, or fair value gap, whatever you like to say. So we kind of have our target for where price action's at least going to go to. So having this, we're going to let price action play out and try to see if we see any signs of reversal, basically. So zoom in, go here. Oh, actually, I'm just going to. All right, so the way we could look at it right now is we have this high. Oops. And this low. So we have our low time frame range. You can even mark it out like this if you want. And you could see sort of the price action develop off of it to kind of confirm it, but I'd rather just mark out the high and low. And what we do is we have a higher high, higher low, a higher high, and then let's see if we get a lower low. So the price action develops. Right there, we get a low time frame break of structure. So with that being said, this is where we could probably see that there might be a reversal to the downside. So what we can do is we can look in this range, see where exactly to target. It's a small range. I think it's only, what is it? 2.5%. So it's a little wide. Luna's been very volatile lately. So what we can do is we can mark out our areas of interest. So obviously we have the mitigation, and we have sort of our breaker, if you can say, right here. So just marking these out. Those are my sort of areas of interest. And if we were to short, what we would do is target this 4-hour demand zone and either use the breaker or mitigation block as the exit. Go right above there. So this would be a 6.1 or a 4.1, depending on what we get. So let's let price action develop a little bit. So price action pulls down, and you can see it's reacting off this mitigation block. So sometimes when it's like that, what you can do is one of two things. You can zoom in on even a lower time frame, like maybe a 5-minute chart to really see. So right now we have kind of a sweep of this high right here with the reaction. So you can either DCA with the same stop loss, or you can wait for there or get an off breakdown, basically. Most likely I probably would just DCA, but I'll do an entry with half my position right here. And looks like we're getting a breakdown. So just DCAing right here in that range. That consolidation right there is probably a sign of a reversal on a lower time frame. Higher time frame consolidation at a resistance is not good, but lower time frame, pretty good. So looking at this, targeting that area, now we'll kind of just let it do its thing. Sorry, just auto. So beautiful squeeze going down. What I most likely would do in this area, because I don't really like just this right here. I'm not using a trend line just to use a trend line. I don't like that there is just probably a bunch of people shorting into Luna, especially just with how the market's been. I don't like the possible squeeze on it. So I probably would at least take my risk off the table here. So let's say if I was risking $200, I would take $200 of that profit off the table just so I didn't have anything, or I would move my stop loss to break even over here. So, or into whatever. So let's say like this area was being defended right here. Maybe you can move it over here so you're at least in profit. It's really just up to your preference and how you like to play this out. So we'll keep letting this play out. And there you go. Straight reaction down into that 4-hour demand zone. So that's how I would have played Luna. Sadly, I was asleep and took profit at a 2R. I think, what was it, like right before I went to bed, whatever it was. I think it was maybe even back here. I took it, but I took a trade. But yeah, that's Luna right there. So 3.7R on that situation. And kind of just running through the thought process of how we got there. So just to recap real quick, you have a high time frame resistance area, which is this mitigation block. You have this target, which was this liquidity void getting filled in, which it mostly did. And you have your target of this 4-hour demand zone, which it's bounced off before. Now you could hold this and maybe go farther because, you know, as price breaks down, you have, you know, lower lows, lower highs. So you could probably, you know, see a sweep into this demand zone. But just for the safety of the price action, I just would have probably taken most of it right there and maybe like 10 to 20% of it run. But overall, so you have the higher time frame area of interest, point of interest. You have the demand zone, which would be your target. If you do get a reversal, then going into the lower time frames, seeing a reaction off this point of interest, setting your low time frame range, getting a sweep of the high, followed by a sweep of the low, marking out your mitigation block and your breaker or supply, however you want to do it. So you have your two areas of interest along with your stop loss, either targeting the top of the range or the top of those, you know, breaker, supply, mitigation blocks, whatever you're using as your low time frame reversal indicator. And just entry either off those, DCA in between, whatever you want to do, and just ride it out, maybe taking profits, taking your risk off the table, moving your stop loss, whatever you're comfortable with, down to your target. So this has been Luna, low time frame scalp. Another thing I just want to point out as well, people see, you know, the price react so quickly off the downfalls versus the swings up. This is all liquidity right here. This is all money waiting to be just taken out. And what you have right here is people that were underwater. So let's say someone bought here or bought here hoping that it was going to go back to $100 per Luna. And price ended up coming up here, hitting another supply area and just rejecting back down. Now, when that happens, you have people underwater that maybe have a higher risk tolerance that can just hold on longer, hoping to mitigate at some area on the rebound, on the bounce back. And that's why you get these mitigation blocks. That's why you get these supply zones, is just people being underwater. So you get these areas of a lot of selling pressure. You have these huge liquidity buildups on the uptrend with no sweeps of lows. So you can see right here we have no sweeps. No sweeps. Really no sweeps. And then we also have, you know, I'm sure even if you zoom in, we have liquidity voids. We have just a constant uptrend. So it's just kind of a recipe for, it's basically a shorts paradise when you see something like this. So that being said, this has been Luna. Just a Review of the trade.